In this video, traders are going to look at, start thinking about the type of market action that would seriously annoy you and flip it on its head and trade around that and trade it to your benefit. Stay tuned with this one. Hey traders, warm welcome to you. Alright, so this got me thinking. I was looking at charts, I was kind of scanning through loads of bits and pieces. I was looking, look how many people are getting screwed over by that move. Man, that's such a great move to trade because so many people are all aboard it and they're just getting hammered and then it's going again. And it's just like, and I just started thinking, okay, this is actually part of my strategy without knowing it, and it may be part of your strategy as well, is to look for the areas where the most people are getting screwed over, for want of a better word. So rather than being the victim and saying, man, I'm always getting stopped out at this level, I'm always getting pinged out, I'm always losing, I'm always this, start to think about, okay, if I'm in the trade, I'm about to take the trade, if this goes here, and then goes there, what would annoy me the most? So for example, let's have a look and kind of put some examples up on the board here. So for example, let's say you're long and you want to get long. What would annoy you the most if you're long? Well, for most people, it's going to be a pullback that spikes lower and then rips the high. There, stops you out and you're in kind of here, long, put long here. That would annoy most people. So, in which case, what do? You say, right, well, I'm not going to take this trade. I'm going to wait until this has happened and then I'm going to jump on. Now, there's a distinct difference to say I'm just going to dive in here. I'm going to wait until the trigger has happened because look, you're not going to be annoyed if you're long and this thing carries on lower and lower and lower, are you? You're going to be like, yeah, fair enough, I got stopped out. A little bit annoying, a losing trade, not the end of the world. The real turn of the screw is when it does this, stops you out, then just rips off aggressively to highs. So if that's going to annoy you, then why don't trade against that? Wait until you get the dip lower, wait until the stops are triggered, wait until it starts to rip up, then get your long. Even if you end up getting long at the same price, the fact that the prior price action has preceded that gives you a tick in the box. Then you get your long, then you've got a place to frame your stop, bang, off you go. Now why is this? Why are we doing it? We're doing it just to annoy people? Of course not. Who cares about the people? We're interested in making as much money as possible, the least amount of risk as possible. So we're doing this because it's about, okay, we look at it from an individual perspective. That would annoy me if I was in the trade, that would annoy people who didn't trade, yes, but it's about how people are positioned. They're expecting to go up, it doesn't go up, it then takes them out of the position. Sellers can't take control of it to push any lower. There's not that much demand coming in, there's not that much supply, coming in. Demand then steps back up and then it accelerates. So it's rethinking it 4 or 5 steps ahead as opposed to looking at it from objectively, but it's a good window into how people are behaving. If you think, well, that would really annoy me, what else would it really annoy you? Probably if you were pushing on like this and the market decided to break through a high here and everyone piled in long and then it failed. That would pretty much annoy you if you went long here and it failed. That would catch a lot of people out. Simpler than this one's a little bit better, but you get the idea. What level would the market have to go to and then go back to another? You've got to think 2 or 3 moves ahead with this one. This is not just one level of trapping people. It's a little bit further than the trapping type trade. This is where would the market go to annoy people? An opening drive that stayed at highs then reversed throughout the end of the day. That would annoy a lot of people because a lot of people are caught long on that. What about if we gapped up, pushed to highs at noon, then reversed and filled? You know, what was that? Now, is this going to be your primary trading strategy? Probably not. It's not going to happen so much. But what you've got here is if you're always thinking, and the beauty of this, guys, is stay with me on this one, is that not only are you adding additional strategies to your library, you're saying, okay, well, actually, why don't I wait until I see something happen that looks great, that reverses, that gives extra clout and weight to the deal, as opposed to being a primary trade, trading it before that happens. Not only do you get that, but the main reason you do this, guys, is it starts to exercise the muscles of thinking, where could this trade go? What could this market do? And then at least if you're not getting caught out as the victim of this, you don't have to necessarily take advantage of this, because this happens not that frequently. But at least if you're not looking at it and you're not being the one who's getting hammered at these lows, the one who's getting hammered at these highs, the one who's getting stopped out, the one who's shorting into the hole on these gap lower that then rip up, you know, all this kind of stuff that traps people, at least then it gets you to thinking, how can I avoid being the one that gets trapped? How can I avoid being the one who takes the obvious trade only for it to smack me in the face? Now, that's not to say the obvious trade doesn't work. Of course it does. From time to time, the right conditions and setups, then the obvious trade is the obvious trade. But preparing yourself actually as well. And even if you do take the obvious trade, knowing like, I might be a sucker here, I might be the one that's getting a bloody nose from this, but I'm prepared for it. I think the risk reward's okay. It looks all right, but you're mentally preparing yourself. So what you're not doing is you're not going into this, stepping into these shoes and going, oh man, I'm always getting stopped out of the highs. Oh, it's so annoying. It stopped me out, then it fired. If you're preparing yourself mentally for that, this example, I'm buying. You know what, I could get low ticked on this. I could get low ticked, but I'm gonna have to accept that because that's where my stop's gonna have to go. I don't wanna give it that much more room. If I get low ticked, so be it. And it puts you in another different frame of mind of controlling in the trade as opposed to then just going, oh, I've been ticked out, stopped out the low, and then chasing it in FOMO and digging yourself a hole and all this stuff we talk about. So maybe something you to think about, guys, is, hey, think about where the market could go to exert the most frustration, the most annoyance on traders, and then trade around that is the first port of call, which is what the title's all about. Thinking about planning your trade as to where the market will trap the most people, annoy, frustrate the most people. Second point is thinking about it in terms of your setup so that you can either accept it or you can avoid it. Those are the three things for you. Anyway, guys, hope it's been of some use to you. If it has, a thumbs up is appreciated. Otherwise, take care, keep the risk managed, and I'll see you in the next video. Goodbye.